Investors and traders, welcome to the channel. Today is 31st of January 2024, and I hope everyone is having a great day. So today we conclude the first month of the new year 2024. So the first trading month of the year has also been concluded, and what a way to conclude it with the FOMC. So today was the Federal Reserve's meeting, and they kept the interest rates the same. Did not increase them, did not decrease them, unchanged. So we'll dive deeper into this, and then we'll also take a look at the key charts that we do. So we'll look at the major markets such as the US dollar, key currency pairs, and the metal markets, the energy markets, and a deeper dive into the stock exchange listed indices. So thank you very much for watching the video, and as always, this video is for educational purposes only and it is not a financial advice. Okay, so here on the screen is the daily chart of the Dow Jones Industrial. This is the cash index, and here I just wanted to bring to your attention the key timings that we'll be looking at. And we also have this little window on the screen. We'll discuss this more when we get into the stock indices, and we'll take a look at the standard deviation levels, especially to the downside, the -1 standard deviation and -2 standard deviation level. So I'm going to put it away for now, and we'll come back to it later. Okay, so here one of the key things that I wanted to bring to your attention was that per our Fibonacci timing analysis, we have a key date coming around Tuesday, 27th of February, and then based on our 54 trading day low to low cycle analysis, we have a key date coming in around 2nd of April 2024, and that also happens to be a key Fibonacci timing level as well, being the 1.618 extension on the time axis. Okay, now time is more elusive, but in my opinion, when price meets time, the pattern is complete. So with today's FOMC meeting, what we have seen is Federal Reserve putting in their language saying that they are more data dependent and they want to see more data come out with regards to inflation, which is going to give them more comfortable readings that what they are seeing in the decline of the inflation is more consistent, and the forces behind it, they are not one-off forces. So that what happens is that they begin to, for example, reduce the interest rates, which they did indicate will happen in 2024 in their meeting in December 2023, and then they have to hike the interest rates again because of inflation forces coming back into the action. So the way I interpret is that, okay, they did not cut any interest rates in this meeting. They want to see maybe an additional 2 months of data going into the March meeting, and perhaps in the March meeting we might in fact see the first interest rate cut come in, and whether that marks the beginning of a cycle, we'll have to wait and see. But the probabilities will begin to stack that maybe the meeting in March is where the interest rates might begin to get a cut coming in Federal Reserve. Again, it's just hypothesis. We'll stick to our models, and coming to the model, just want to reiterate 27th of February is a timing date. We'll keep that in mind, and then we have late March to early April, another date coming in. And the way I see it is that perhaps from now till the end of February, we might see some choppy markets. In fact, we might see the markets put in some sort of a low, and then maybe a retracement higher back to these highs. Maybe in certain markets, a higher high as well, till we begin to reach the 27th of February, and that's where we actually put in some sort of a high in, and then maybe perhaps in the following weeks till March, end of March, the markets come under pressure, and finally we put in a low end of March, early April per our timing. That's the kind of roadmap I'm putting out there. Whether that's going to happen or not, we do not know, just based on the timings that we see on this chart. Okay, so with that, what we'll do is we'll begin to take a look at the markets, and we'll start with the dollar index. So this is the daily chart of the dollar index, and what do we see? Oh, we actually see a mixed picture in the dollar. So what we have seen is a fair amount of volatility coming here. But I would have thought that if dollar was really strong, it would have taken out this 78.6% Fibonacci retracement, which actually did not do. And we were actually favoring 104 level, 104.25. And that has not happened actually. But we do have the non-farm payrolls coming on Friday, and that actually does move the currencies and the dollar quite a bit. So maybe some sideways choppy action till Friday, and then Friday we get some sort of a definitive move, so we move out of this trading range perhaps. So here the chances are still for a stronger dollar, and 104 is still on the cards, unless and until we break below this 102 50 level convincingly, and then I think that would mark a bigger, smaller ABCD as well. So ABCD, and if we take this low out, then even this bigger ABCD, which could actually see the dollar move much lower. Okay, with that, we'll just take a look at the dollar versus the Japanese yen. It's a fair amount of movement in this currency pair. And what do we see? We actually see the Japanese yen getting stronger against the US dollar. So here what we have seen is that ever since it found support from the 78.6% Fibonacci retracement, the dollar has been much stronger against the yen. But now we are seeing some strength coming in the yen, and yen is actually getting stronger. And this currency pair is actually moving towards this 38.2% Fibonacci retracement. So anywhere between this 38 and 50%, so 145.55 to 144.55. That's the area most likely it is going to retrace back into, and that's where we also have the 200-day moving average. So looks like shorter term the dollar is actually getting weaker, and we have the FOMC figures coming out Friday. So again, a big mover for currency even taking place quite soon. Let's take a look at the euro versus the dollar. So this is daily chart of the euro USD, and here we see a fair amount of movement, actually more movement than what we have seen in the Japanese yen here, and the euro actually weakened against the dollar here in this currency pair, and we can see this bearish looking candle. And here what we are seeing is that this market is actually here. Let me actually draw this. We need 50% here, and the market is rejecting this 20-day moving average here. So fair amount of resistance for the euro. Dollar getting stronger. It's retraced about 50% of this entire low to high move, and looks like maybe it's gonna actually continue in this direction for a little bit longer, maybe up till here, 107.50, 107 level as well. That's a possibility. So again, price below the 200-day moving average and the 20-day moving average as well. So momentum is weak. So dollar is actually stronger against the euro. Now let's take a look at the cable. So cable is actually just sideways action. So this currency actually against the dollar has been one of the stronger ones, in the sense that it's just gone nowhere. Look, guys, just there is strength in the sterling. So looks like there are players out there which are actually accumulating this currency. And tomorrow there's an event for the cable. We have the Bank of England coming out with its interest rate decision, whether they are going to actually in fact reduce the interest rate. Highly unlikely. What is likely is they might give some sort of a guidance, and just like the Federal Reserve, what they did in their meeting in December, might give some indication to the market, some forward guidance, what the bank might be looking at in terms of the inflation figures, whether it is done fighting for inflation, and they will begin to move towards managing the more of a business cycle, where they might actually begin to give indication of maybe some interest rate cuts that might come in 2024, which will give some relief to the financial markets, interest rate sensitive areas such as housing, and that would also mean some sort of weakness should come in the sterling as well. But at the moment, it's just sideways. So another pair that we are watching. Okay, so let's actually now take a look at the gold market. So this is the daily chart of the gold in the, this is the COMEX futures market, COMEX gold contract. And here, look, very interesting. Here the gold actually is pretty stable. It did have a fair amount of movement, but I would have thought that the gold actually would be closing negative for the day, but it did not. Of course, we had the rollover come in, and because of that, we also see some gap around here. But the gold is fairly stable. So what does it mean? It means that maybe we are going to go and tackle these highs of 2090. And in fact, what we might be looking at is a pattern like this. ABCD to the upside. Here we go. Before that, we were looking for this ABCD to the downside to around 1988 level, but looks with the kind of strength that I see in this market, most likely it's just gonna go and tackle these highs of around 2100. So gold has been pretty strong, especially after the FOMC meeting. So this indicates that there's actually strength in this market, and also this market is pretty sensitive to the interest rates. So maybe there is a fair amount of expectation in the market that actually Federal Reserve in their next meeting might actually cut the rates. So we'll have to wait and see. And of course, we have the FOMC data coming out on Friday, so that also impacts this market. We'll take a look at crude oil. So this is daily chart of the crude oil. Crude oil again negative for the day. Fair amount of weakness coming into this market. What we have actually seen is that this pattern that we were watching, ABCD, right to 77.66, and that was completed. We had a pretty strong day coming in on the 29th of January, Monday. I believe some of the events that took place from a geopolitics perspective, there was some gap up opening, and then we have seen just profit taking come in, sellers come in, and now today it actually took out the lows of yesterday, which is 30th of January, which highly suggests this market is actually moving lower, and maybe 74.30, that area where we have the 20-day moving average is next on the cards. And from there we'll have to really watch the price action, because what we are seeing is that of course there is selling which is coming in, but it has actually been making higher lows, and we have also seen a higher high come in. So this market, a lot of volatility in this market, and it looks like it is making higher highs and higher lows, but any new highs they get sold, and there is a retracement, and then we see some buying and accumulation comes in, and then it makes it move higher. Natural gas. So this is daily chart of the natural gas, and wow, this market, talk about volatility in this market, it's just crazy. It opened up really weak on Monday, and then the Tuesday and Wednesday it's just been accumulating, in the sense that it's just holding these lows. So the chances are, and we did have a rollover of the contract as well, so that's why we see a bigger gap as well, that if it begins to stabilize around here, we have these lows here, chances are maybe it's just also getting ready to move up, quite what we are seeing movement coming in the energy markets. Okay, so with that, we will begin to move into the stock indices, and let's have a look at the S&P 500 cash index. This is the daily chart of S&P 500 index, and with today's action, because of the news that coming in, look at this. The market opened with a gap lower, a fair amount of gap. It had closed 49.25 roughly, and it opened around, let's see where it opened. It opened 48.99, and it had closed 49.20. So fair amount of gap, about a 25 points gap, and just a negative day for today. But the important thing is that this is the pattern ABCD that we had been watching for quite a long time, as the subscribers will know. And it's not really a surprise that after hitting our target of 49.10, the market pulled back, and rather pulled back sharp, because we were prepared for it. We were watching this, we forecasted this in advance. Now on Monday, here on 29th of January 2024, if you were watching the market intraday, there was just it was just restless. The amount of buying coming in this market, especially around, I believe it was 3 p.m. Eastern time. I believe 3 p.m. or 3:30, when I believe there was some auction for a 30-year bond or something like that. Please correct me if I'm wrong. There was a fair amount of gap, not really a gap, but a huge bar intraday, fairly big bar on the 5-minute chart, which came in, and people were wondering what it is, and nobody really knows, but it might have to do something with the bond auction. And in fact, the market went above our price, but nonetheless it has closed below the pattern that we were watching. It's actually completed. We had been warning about this, in the sense that, okay, watch out, this pattern is out there. So with that, let's actually take a look at now ES. This is the S&P 500 E-mini futures, the daily chart for it, and here we had the 49.40 as our level. The market went a little bit higher. We had a higher level of 49.70.75, which is this 1.618 extension of this cycle coming in from lows, this ABCD bigger one. It's not clearly mentioned here, but I just have the extension. So it just went right between these two levels, and in fact we were watching that 49.25 might actually be the high, but the momentum was quite strong. That's why we have this this butterfly looking pattern around here. But it went a little bit higher, especially on Monday. It was just relentless buying coming in. Now the question is, where are we? So here I'm going to bring the standard deviation levels that we watch. So the -1 standard deviation coming around 48.37. The market is not there yet, so it's got about another 40 points or so to go down to touch this level. And the 48.05 is the -2 standard deviation level. So far the price action is kind of, really within the expected movement of the expected movement. Oh, I think I've got the wrong figures for you. My apologies. Let me bring up the right one. I just realized I have the wrong spreadsheet open. Hold on, guys. Yeah, it's good. I found out about this, because I was gonna give wrong levels otherwise. So here we go. Okay, I am bringing this over. Just a sec. And yeah, apologies guys. So here 48.25, and the market is not there yet, so it looks like this is where it's gonna go for the ES. Now the other thing that we are watching for is that we have this 38.2% Fibonacci retracement, which come around 48.58, and also the biggest decline in this move here, in this shorter move from here to here, has been about this much. And if we just try to project it, then we get a figure of 48.12. So that's also pretty close to our the -2 standard deviation. And if I just do, and yeah, and the 61.8% Fibonacci retracement is also close by. So it looks like we have some further downside to go, but within the standard deviation level. Okay, now we'll take a look at the oh yeah, and also if we go back and take a look at our weekly chart, so this is the weekly chart, and here look at that, 49.43. So that's the 1.618 expansion of this swing. Market just went right there a little bit higher, but too much emotionalism, and now what we are finding is that market is pulling back. Okay, so let's take a look at the NQ. So this is the daily chart of the NQ. So here again, here are a number of things. 17,700 is what we're looking for. Is what we got. We have this ABCD in red highlighted here, and also in terms of the standard deviation levels, we have the -1 come in around 17,204. So about 80 points from where the market is right at the moment. It looks like it might just get there tomorrow. And if we also look at just a retracement, so if I can get the tool working, there we go. So here where the market is at the moment, it has already retraced 38.2% Fibonacci retracement, and about 16,900 is the 61.8% retracement. But looks like where this 20-day moving average is around 17,100 or 17,200 roughly. This is where the market might actually find some support possibly, but we are watching our standard deviation level, so we have some little way to do on the downside. And if we look at this on the weekly chart, here we go. On the weekly chart, what do we see? It went right to the 17,700, and now this week we have seen some weakness come out, but the week is not over. We do have this big expansion of this entire 2020 to decline, come in at 18,570 level. Could the market get there before it starts some sort of a meaningful pullback? There is a possibility for that, but for now we'll take one thing at a time and we'll keep on watching the weekly levels. Look, we had a pullback right here when the new year started in 2024, and there was a lot of chatter about it, and look what the market did. It had a really strong couple of weeks, and you know, the number of points it went up by is just a sight to be beheld. Okay, so now what we'll do is we'll take a look at Dow Jones Industrial. This is the chart of Dow Jones Industrial. Here we have this ABCD completed a long time ago, but this market has actually taken this level out, and I was actually quite you know, how to put it, relieved in the sense that okay, this market is finally catching up, because some of the other indices were stronger, and like the S&P 500 completed its ABCD lower than this index did, but now it looks like it has done this catch up, and this market also had a 300 points move down, or minus 0.8%, but nothing like, I mean, really strong moves have been where this index has been down over 600 points. And when we look at the standard deviation levels, 37,555 is where the -1 standard deviation is for the week. We are not there yet, so it looks like there is some further downside, and possibly right to the 20-day moving average, which comes around 37,987. So it looks like this index might actually try to attempt that. If we just draw some fib stuff, here we go, and from the fib stuff, yeah, 38.2 is fairly close by, and the 61.8 comes around 37,850. And actually standard deviation levels is a little bit lower. So here, yeah, it could be just 1 or 2 day knee-jerk reaction to the downside, and the market actually begins to recover. And the timing aspects that we're looking at right at the beginning of the video, maybe around the end of month of February, is when some meaningful kind of a top comes in. Finally, we'll take a look at the Russell 2000. Here we go. So that's the daily chart of Russell 2000. Russell 2000 is actually much weaker. one of the things about this index, it's not really able to close meaningfully above the 38.2% retracement. That's why we have this purple pattern around here, because if it's not really able to properly negate this pattern, then the chances are it might just retrace to 61.8% Fibonacci, 1815. That's quite down from the standard deviation level 1951. That's what we are looking at. Where are we now? So 19, so it's got about another 10 points just to meet the -1 standard deviation, and then -2 standard deviation is 1915, which is much lower. So again, looks like there is further downside in this index as well. So this is what we are watching for in the stock indices. Just a reminder for really long term, let me bring out the weekly chart for the S&P 500. This is what we are looking at. This big ABCD pattern completed right around where we were expecting it to. And do not forget this big blue line since March of 2020 from the COVID lows. And look, every time the market has touched this, it has just rebounded. So that long-term trend line support is still intact. So thank you very much for watching the video. Good luck and good trading. Speak to you guys soon.